Hey guys, welcome back to another video. In today's video, I'm going to be going over two healthcare stocks that have outperformed the market over the last year or so. They are both trading below their intrinsic value per share, so they could potentially present a good buying opportunity. And on top of that, each of these stocks have really strong financials in their financial statements, and they've reported strong earnings growth in their last earnings report, which came out in the second quarter of 2022. So I'm just going to review each of these companies and then compare them against each other using a competitive industry analysis. And then lastly, I'm just going to figure out if they present a good buying opportunity from a value investing perspective. So thanks in advance for leaving a like on this video, and let's get right into it. So the first stock I'm going to look at is Elevance Health, and we can see that over the last year, their stock is up about 30%, even though the S&P 500 is down about 4.20% in the same time period. And so right here, we have their second quarter quarterly report. And we can see right here from their financial statements, the first one they report is their balance sheet. And we can see that their total assets for the second quarter of 2022 ended out at about $100 billion, which is up from $97 billion in December of 2021. And then on their balance sheet, we can also see that the majority of their business is financed by liabilities as opposed to equity. So they have about $65 billion in total liabilities and $35 billion in total equity. And that mainly comes from some long-term debt that they have here sitting at about $21 billion. So that's obviously going to eat into their cash flow a little bit because they're going to be paying down interest payments. And then on top of that, we can also see that the increase in their total, or the decrease in their total equity, came primarily as a result of a increase in accumulated other comprehensive loss. So that probably came from losses that they experienced from the investments that they've made using the capital sitting on their balance sheet. And so when I scroll down here to their income statement, we can see that their total revenues or total operating revenues here, not including the investment income and the losses or gains on their financial instruments. We can see their operating revenue increased from about $33.2 billion to about $38.4 billion. So that's an increase of about 15.6% year over year for Elevance Health that they reported in their second quarter of 2022 versus the second quarter of 2021. And then we can also see from their net income here that their net income actually decreased from about $1.8 billion to about $1.6 billion. And then they reported earnings per share of about $6.79 per share. And then lastly, if I scroll down here to their final financial statement, the cash flow statement, we can see that their net cash provided by operating activities came out to be about almost $5 billion, which is up from $4.1 billion in the 6 months ended for 2021. And we can also see that from their financing activities, they've been returning a little bit of value back to their shareholders in the way of repurchasing common stock as well as with cash dividends. So we can see that they repurchased about $1.1 billion worth of common stock. And then on top of that, they also distributed almost about $618 million worth of cash dividends. So definitely returning a lot of value back to their shareholders. And then this repurchase of common stock is probably one of the things that's contributing to their really strong stock performance over the last year or so. And so now if we go into this discounted cash flow model to figure out what the intrinsic value per share of Elevance Health is, all of these values I got from Yahoo Finance. So the growth rate, basically analysts from Yahoo Finance are estimating that this company is going to grow compounded annually at about close to 12% year over year. And so for the next 5 years after that, I was conservative and I just cut that value in half. And then they also reported about $7.28 billion of free cash flow in 2021. And then if I net their cash against their debt on their balance sheet, comes out to be close to about $9 billion. And right now they have about 240 million shares outstanding. So based on these metrics right here, we can see the intrinsic value per share for Elevance Health is estimated to be about $543 per share. So that compared to their current share price means that Elevance Health, like I said at the beginning of the video, is currently trading at below their intrinsic value per share, despite the fact that their stock price is up 33% over the last year, and they've reported extremely strong financial statements and earnings growth for the second quarter year over year. So definitely looks like Elevance Health could be a potential buying opportunity at the moment. But I want to compare them against one of their main competitors here to see if they present a better buying opportunity or not as good of a buying opportunity as Molina Healthcare. So right here we can see this is one of their main competitors. These two stocks are competing in the same industry. And Molina Healthcare is up about 25% over the last year. So basically, Elevance Health is beating them out by about 8% over the last year. And so if we go into their financial statements right here, first one they report is their income statement. And we can see that for Molina Health, that their total revenue increased about 17.65% from $6.8 billion in the second quarter of 2021 to $8 billion in the second quarter of 2022. And then their net income, we can see, increased from about $185 million to $248 million. So that's an increase of about 34% year over year. And if we remember from Elevance Health and their income statement, I believe they reported a decrease in net income. So compared to Elevance Health, it looks like Molina Healthcare is definitely presenting more earnings growth. And so if we scroll down here, we can see their balance sheet, and we can see that for Molina Health, their total assets came out to be about $12.5 billion, up from $12.2 billion. And we can also see that the majority of their business is financed by total liabilities right here, with about $9.7 billion worth of total liabilities and about $2.8 billion worth of total equity. But contrary to Elevance Health, Molina Health in this case has experienced an increase in stockholders' equity as opposed to a decrease, and that primarily came as a result of an increase in retained earnings, which is good because it means that their business is growing as a result of positive cash flows, as opposed to if they were just issuing more shares and adding more partners to their company, which would have basically diluted previous shareholders. And the last statement I want to look at is their cash flow statement right here. We can see that this is also something different in comparison to Elevance Health. Elevance Health reported, I believe, an increase in their operating cash flows, as we can see right here. But Molina Healthcare is reporting a decrease in their net cash provided by operating activities from about $1 billion to $730 million for the 6 months ended in 2022. And we can also see that they didn't really pay out much in dividends, but they did repurchase about $200 million worth of common stock. And so if we look at the intrinsic value per share for Molina Healthcare, we can see that it's estimated to be about $835 per share, with a 50% margin of safety of about $417 per share. And so compared to their current share price, that means that Molina Healthcare is not only trading below their intrinsic value per share, but they're also trading below a 50% margin of safety relative to their intrinsic value per share, despite the fact that their stock price is up 25% over the last year. So that's definitely, from a value investment perspective, based on their projected free cash flows into the future for the next 10 years, looks like it could be presenting a stronger buying opportunity than Elevance Health from that perspective. But to end off the video, I wanted to compare them in terms of an industry analysis to see which business has better efficiency in terms of creating profits and also using their assets to get a return for their business. And we can see that comparing the two companies against each other, that Elevance Health actually has better efficiency than Molina Healthcare, despite the fact that, as we can see from their financial statements, Molina Healthcare reported slightly better earnings growth. And on top of that, Molina Healthcare is trading far lower below their intrinsic value per share compared to Elevance Health. We can see that their gross profit margin, Elevance Health is beating out Molina Healthcare by about 4%, 2% in net profit margin, and then they're sort of almost similar in return on assets. Elevance Health is beating out Molina Healthcare by about 0.5%. So it looks like, from a competitor analysis, from an industry analysis perspective, that Elevance Health could be a better buying opportunity than Molina Healthcare. But if we were to compare them against each other in terms of their projected free cash flows as well as their growth rate that's expected by analysts from Yahoo Finance, then we would see that Molina Health definitely looks like it presents a better buying opportunity than Elevance Health. But then on top of that, we can see that the stock price from Molina Healthcare has not outperformed Elevance Health's stock price over the last year either, even though both of them have beaten out the overall S&P 500. But I'll definitely love to know what anyone watching this video thinks about these two stocks. These two stocks are definitely on my radar, more so Molina Healthcare just because of how much lower they're trading below their intrinsic value per share. But I'd be interested to know if anyone watching this video is thinking about buying into either of these two stocks. If so, let me know why in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.